Hey traders, Ragi here. Welcome to the premium video. Let's jump right into it. And for those of you that were not in the chat room with me this morning between 9:20 and 11:30, you probably got a lot of alerts from me, and I hope that everyone has the Simpler Trading mobile app installed, because that is how I communicated today's trades, 4 for 4. And I'm going to tell you, let's start off with this, because I think this is really pretty important. I look at my morning process. I look at the way that I shared the process with the folks in the room. And, partly the success for day trading is just simply whatever movement we get, the ranges, if they're wide enough, and then retracements within them. And I can't control that, right? I can monitor it. I can analyze whether I'd like to be short or long for the most part, but I can't control that. What I can control is whether or not I'm focused on the particular symbols and the particular time frames, meaning 1 minute. Today that meant the NQ, the YM, the Canadian dollar futures, and the crude oil futures. And so I didn't venture into outside markets. I didn't look at daily time frames. I didn't do that. Let's just jump over quickly to this, particular chart. I didn't distract myself, right? I kind of call her short attention span Ragi, and I have to deal with her, right? I'm not really a linear thinker. I think almost like a shotgun shot, like it just boom, and the buckshot goes everywhere. That's the way my brain works, which is terrific in some ways, but a challenge in others. I'm just not a sequential ABC. Checklists are required for me, because otherwise I'm going to think about all 9 steps at once. And again, it's both good and bad, but I've got to think about this in terms of the way that it affects my trading. So again, I kept that short attention span Ragi at bay by focusing only on these related markets, focusing only on those 1 minute time frames. I kept my eyes on the setup. So if you're a little bit like me, and maybe you are, I think that there is this distraction temptation that we all sometimes succumb to, and we just don't say, look, can I manage 3, 4, 6 day trades at once? Whatever that number is, then stop and then keep an eye on just those. All right. And that's really what I think was most effective about the way that I traded today. So if there's a takeaway, and this is what I'm going to do again tomorrow, I'm going to stay absolutely true to whatever that market barometer is telling me as far as being bullish or bearish. Focus on those markets that are either being, acting with some relative performance that give me the best shot at follow through. And we'll just do it all over again. And then all I can do is just say, look, after I've done my job, then it's really up to the markets as far as follow through. And that I can live with, because I can't control what the markets do, only where I engage them, or even if, right? Or even if. Okay, so good day trading day. I want to just take specifically the setups from this morning and talk about them just for a moment. Our barometer, which is the yen and the COMDOLs, mostly the Aussie, sort of the leader of the COMDOL. So yen, COMDOLs, bonds, VIX, and even crude. And for the most part, despite the fact, look, a gap up, that was the first thing we even dealt with. A gap up does not necessarily make me bullish. In fact, the gap psychology really wasn't that strong today, because we did not exceed the average to the upper end of the daily price movement range. It was actually in many cases not even worth mentioning. It was so low on that measuring stick of the daily price movement range from AutoChartist. So then the next thing is the caution day. Was it a caution day? It really wasn't at all. I mean, we had a red hot zone in the non-manufacturing, the services PMI. But at the end of the day, what was most interesting to me was sort of the odd 3 p.m. CNBC interview with Clarida. Now, while I prefer, generally speaking, because especially in the Asian session, I'd rather keep Bloomberg on, because they're going to talk about the Asian markets. Oftentimes I trade the Asian markets, and even pre-market, I'd rather keep Bloomberg on. So say if I'm up 7 to 9, I'll probably have Bloomberg on. If I'm trading the Asian session, 7 to 9 p.m., I'll have Bloomberg on. That's Eastern time. But during the regular trading hours, I will keep CNBC on. CNBC tends to move the market in a way that Bloomberg does not. All right. So it's not a matter at that point in time between 9:30 and 4 who is most helpful by way of information. I think actually Bloomberg is more helpful. But in terms of market movement, almost a catalyst unto itself, that is CNBC. So I will happily mute that, and then I will keep it in the corner of my eye. And what we saw this morning, we mentioned in the chat room, was that Clarida, FOMC member Clarida, was speaking at 3 p.m. Boom. It's on a caution day, but it's really a good reason to say, you know what? We've had a good day in the NQ. We've already taken profits. We've got a break-even stop. We could have even trailed a stop. It's probably a good time to just kind of tell the market, you know what? I'm out. I'm out of here. I'm clocking out, so to speak. So think about those. And this wasn't on the, we did have some other Fed speak, which hardly moved the market, by the way. And that reminds me, I do want to mention that sometimes when it comes to Fed speak, you're not going to see it on Forex Factory. You will see it on tradingeconomics.com. I actually really like tradingeconomics.com, and we might start using this a little bit more often as opposed to Forex Factory, because I do trade lots of markets. I play EWQ and EWG, and I'm looking at what's happening in different currencies. And so this is a really fantastic calendar, quite frankly. I don't know why I don't use it more often, but the events that are here will include oftentimes those FOMC speaking events that are not going to be mentioned, like Evans was not mentioned on Forex Factory, Ballard, Bostic, they were not mentioned on Forex Factory, but you'll see omitted is that Clarida event. This is why I've been kind of carrying on for a few minutes. You've got to keep sometimes CNBC on, because, those are oftentimes some events that are not going to be listed in a way that can affect the market. And people found out really quickly at 3 p.m. just how much. All right. So what do we know? We had mild risk appetite, risk on. It led us to be bullish. And you'll see that there's a certain amount of harmony in the trades that I took. Now, if there was a short on crude and a long on the NQ, I probably wouldn't have minded. If there was a short on crude and a long on the YM, that would have got me to pause for a moment, because the YM is going to be a little bit more sensitive to crude oil strength. Same thing with the ES and definitely the RTY. If I had a short on crude and a buy in the Canadian dollar, again, there's a disconnect. So these intra-market connections are important. Today, we were all in on risk appetite. And if you're not willing to go all in, here's the thing. You don't have to do it. But if you don't have the clarity to say, look, I'm going to be long Canadian dollar, I'm going to be long NASDAQ, I'm going to be long Dow, and I'm going to be long crude. If you don't have that kind of confidence, you probably don't have a lot of clarity in the market barometer, and there's a reason to pause. Again, you don't have to take all four, because quite frankly, I would have been probably wrong across two to all of the trades, 2 to 4 of these, or I would have been winners across the board. And again, the confidence I had was the barometer and the fact that these were all syncing up together. Long Canadian dollar, long crude, long Dow, long NASDAQ is pretty, again, there's a harmony there. There's a risk appetite, risk on harmony there. So again, ask yourself, if I'm getting mixed signals where crude's a short, Canadian dollars are long, NASDAQ is a long, Dow's a, though when it's mixed up like that, let that be sort of a caution flag in and of itself. All right. So that's a quick rundown from this morning and sort of what I think are the more important takeaways. By the way, if you have the time in the morning, join me 9:20 to 11:30 a.m. Eastern. If you want to wait till 10:15, if you've got things going on, if you want to wait till 10:15, that's fine. You'll notice that I didn't even start sending out alerts until, well after the open, gang. Very seldom will we be trading the markets right on the open. And what are those instances if we would? If there is a gap that meets the criteria for the daily price movement range, so it's a dominant gap psychology, then I will go ahead and look for the first 3 to 5 minutes for momentum and possibly follow that. The other thing is, if on the open, right off the bat, we're in the hourly price movement range and preferably even being confirmed by the V-score. So V-score extremes and our hourly price movement range. What do we do? We look at volume and we look at volatility. So volume is going to be V-score and the V-score bands. And I'll have a pretty good map as far as the top of the range for the V-score and the bottom of the range for the V-score even before the bell rings. Okay? And then my volatility sort of forecasting, if you will, our time-based volatility forecasting, our volcasting, just to make it less syllables. Sort of our volcasting is what? It's our hourly price movement range. We're forecasting the volatility for that hour based upon the typical price movement range. So yeah, this is kind of a volcast. I kind of like that. So if we're in that range extreme for the V-score or the extreme for our volatility forecasting, we've got potentially something we can do quicker than the clearing, quicker than the initial balance. Today we did not have that. And so we waited actually today we did a breach retreat. Now you might ask, well, Rog, why were we okay to the breach retreat? We haven't done this in almost 2 months. Why are we okay with it now? For the same reason in many ways that we were not okay with it and disregarded it for almost 2 months. Because the volatility forecasting, our volcasting showed that we were way beyond the typical volatility ranges. We basically had to either see one of two things happen. And really simultaneously we saw volatility contract while our hourly price movement range calculation from AutoChartist caught up. So contraction and catching up led us to now where price action is respecting and trading within our HPMR levels, our hourly price movement range forecasted levels. And since we're inside of them, all of a sudden you're going to notice breach retreat start working again. So there's one of your cues for those of you that are wondering, when do we turn it on? When do we turn it off? Let volatility, let these volcasts be the reason. Okay, so a couple other bigger picture things. NASDAQ is still the only market that makes sense to really be bullish on a pullback. Overall, gang, longer term, I'm still very bearish this market. And a lot of folks have asked, Rog, where are you on some of those trades we took earlier? Some of them aren't really hurting as bad. Some of them are still relatively in sort of bullish mode. Some of them are teetering around the 50% loss. Some of them are a little bit ahead. But for the most part, the thing that I'm able to sort of sit through right now, even on some of those trades that have exceeded their 50%, and again, gangs, this is a little bit of trade as I, do as I say, not as I do a little bit. For example, on things like EWG, I'm only down 30 cents. On things like FXA, I'm down far more than that. We're down to 45 or 50 cents on a $1.50 option, right? On things like the TLT, we're fine. On things like the VIX, again, we're probably closing in on 50%, the VXX. On markets like the XLF, I'm closing in on 50, let's see, where am I XLF? I think I'm about 30 cents. Now I'm about 30 cents down on a $1.67 option. We're trading at $1.35. So these are all in different places in terms of my 50% premium threshold, but the real threshold, see now look, we can argue with the 50%. Some folks would say, Rog, I'm okay with this, letting this go to zero if it's a $1.30 option. I don't mind losing. I was okay with that. It doesn't create a loss that's greater than 2.5% to 5% of my overall account. Those are things that I cannot account for from trader to trader, right? 50% on premium value is actually pretty difficult to come back from, which is why we have that threshold. And then 2 to 5%, a single trade putting that kind of dent in your account, that's about all I want to tolerate. But the one thing that we do have going for us is the fact that this market can be very volatile, and volatility in the favor, in the direction of our put or call is a fantastic way to play catch up. It can happen that way. And the other thing that we have, gang, is time. I'm averaging about 45 plus days before I see expiration, and I'm still a good 2 weeks out from the 30-day window. So if in the next 2 weeks we see the market coming back to us a little bit, I'm going to be right back to where I need to be, whether unchanged and I can just get off this ride, or even up a little bit. So the the sort of, well, we can kind of argue with and massage that 50%. I get that everyone's at a different threshold for risk. But the one thing that we cannot fight is the time decay when we are the purchaser of the options. So keep that in mind with some of these positions. Are we dealing with time decay? No. Are we dealing with momentum moving against us? Yes. Are we at our 50% threshold? Some yes, some no. So a lot of folks ask me, Rog, how do I measure these? Those are the touch points, if you will, that I'm constantly checking back to make sure I'm not beyond those things. Okay. So I hope that helps. Are there certain markets that I'm looking for some opportunity? Yeah, we've talked about these in previous premium videos. The ag unwind, I still love. We've talked about cattle. We've talked about soybeans. We've talked about corn. I've given you guys the specific levels that I'm interested in. So, those are positions that we can play with the underlying futures options or the underlying futures. And, commodities, and generally speaking, the CRB index, which is kind of like the Dow of commodities, is still very much saying we are not out of the woods, gang. And I'm not looking at the stock market as the economy. I think commodities tell us a lot more about this economy, and it's still not where we want it to be. All right. So we'll talk more about this tomorrow. We're going to do a lot more day trading. Hopefully the market's going to have some clarity and give us some setups. Today was a terrific day. And as always, gang, I did want to let you guys know that, here we go. If you have any requests for the HPMRs, the list is starting to expand, especially on the stock side. I'm getting a lot more requests, and we're going to probably change up the way we do this so you guys can pick and choose which HPMR scripts you actually want to import rather than groups of them. So we're probably going to change that in the coming weeks. But let me know what your requests are. Just in the subject line, just type in my HPMR request and the symbol, right? And then if you have any requests for premium video, topic symbols, in general, any kind of questions, and I'm very straight up with you guys, email me, put the question, put the request in the subject line. No niceties required. You don't even have to put any words in the text in the body of the email. It's just about brevity and getting you guys the answers you need as quickly as possible. So let me know, and I'll see you in the next update.